Very well, very well. We're slowly starting here. Welcome everyone to this new session. Today is Thursday, February it's March now. It's March the 3rd. Welcome everyone. Welcome to the Forex Tokyo Open Live Room. I hope you had a good day. We have Chris Mervin, Sinatra, Forex. I'm not sure whether that's the same Sinatra we see every day. I would suppose so. Welcome Jason, Mark S, Lee, Mauricio, Horace Mervin, Adinda, Peter, Richard Perry, Label Lopez, Roland, Desi, Dion, Gary, and BW. Thanks for joining in. Today is Thursday. As I mentioned, is March. Sorry, today is still Wednesday. All right. And I'm going quick here. Today is still Wednesday. We have yet another day to go. Good morning, Marvin. Thanks for joining in. This is the FX Street Tokyo Open Live Room. It's a daily show that features real trading and real analysis at the heart of the Asian session, with me, Giuseppe Basile, also known as the FibStalker. Now, this week we will keep starting at 8 p.m., but bear in mind that from next week, we're going to anticipate our start. There's going to be a time change from next Sunday. We always start the week on Sunday. We will start at 7 p.m. and we will go for 45 minutes. Okay, so new time, keep in mind, the new time next week is going to be 7 p.m. Tomorrow, which is the last day of this week, it is going to be 8 p.m. Okay, so let's keep that in mind. I see here we are starting right away. I want to take the chance to thank Daisy, who every day works for FX Street, with FX Street, to prepare this webinar. So thank you very much, Daisy. Now, before we get into it, and I know you have, hello, Scott, hello, sorry. And before we get into this, let me just briefly talk about risk. We all know that if you learn to manage risk in trading, you'll be successful, and that's it. It is as simple as that. You manage risk, you are successful. You never learn to manage risk, and you will have problems. You're very welcome. Welcome, Karim. You're welcome, Desi. So trading Forex and its derivatives, futures, options, and CFDs and other instruments with or without retail of exchange transactions involves substantial risk of loss, and it's not suitable for all investors. You may lose all or more of your initial investment. Leverage can work for you as well as against you, because it magnifies gains as well as losses. Past performance is not necessarily indicative of future results. Okay, so keep in mind that that's very, very important. Please also review the FX Street risk disclosure on the website. The information, including the commentary and the trade ideas provided in this webinar, should not be relied upon as a substitute for extensive independent research, which should be performed before making your investment decisions. The information that I provide here, the material and the general information, as well as the trade ideas, are provided to you for educational purposes only. And I, Giuseppe Basile, FibStalker Consulting Incorporated, FX Street, will not be responsible for any losses incurred on investments made by attendees as a result of any information in this webinar. Okay, this is the necessary disclaimer we always do. All right, so welcome Gary, Joe, Jason, Desi, Mervin, Sinatra, Mark, Lee, Mauricio, Zores, Adinda, Peter, Richard, Perry, and Label Lopez, Roland, Dion, Gary, and BW. I see some other names here that are not in the list. Karim, sorry, Jason, Joe, Gary. Hello, everyone. So let's get into the charts here. All right. So and I see that there is already a request there. I'll try to accommodate that. Before I do that, just let me say hello to everyone. Welcome. Welcome in, and let's dive into our charts. Okay. So I see there is already a request there. It's related to the Australian US dollar, and as Sorry is saying that he opened a position there, what I'll do, I'll actually should be able to see the chart now, so I'll actually get into that and try to understand what's going on. So it's a long, and you will remember that we mentioned that this market has indeed traded the 72.31 yesterday. He reacted again to this level, but then we saw this market moving higher. So the good news of the GDP we saw yesterday has kept pushing this price higher. Now that said, just a mention for the shorts here. Provided you get a free trade, you don't have to worry about being wrong, because we never know what the market can do. The market could have tested this level again without never challenging these highs and move lower. So if you think you know what's going on, then it's better not to gamble. So I gladly see that Sorry has opened a long at 71.71. Very well done. That's around this level here. So clearly this market is putting under pressure shorts. Okay. So let me take some notes here so that I will have some notes for the article that I write every day at the end of the session as well. So this market has resistance at 72.30 here. Had resistance. This was a daily short. Hello, Pantelis, welcome. And this level has been respected, and now it's under pressure. So where this market is moving, Sorry, you are in a good position there. This market is actually going probably to break the back of this these weekly shorts here. So a safe bet would be to wait for 73.25. Of course, this market could move also higher, but we don't know how and how this market is going to move. Whether this market starts moving in extensions, or this market will just trade the next measure move. So if you plan to take profits, you can take profits just above this previous highs here. The market could actually stop temporarily around these levels where profit taking could come in, but this market could also continue into 74.34. Okay, so I have not trusted this short for some time, as you know, if you have followed me also here on the room. So what we're going to do here, we're going also to review this. We don't know what non-farm is going to do. Sorry, I'm not going to. I don't do assumptions on the market. Okay, so if you want to keep the position, at least remove partial profits around that area. Okay, take partial profits around that area, because it might be a big event that pushes price lower and stops you out before continuing higher. I mean, I don't know what's going to happen. So, he could keep pushing it higher like there was no tomorrow, or it could come back to you even temporarily in the 1 to 2 hours after the event. We don't know that. So I'm not gonna guess and tell you, oh no, for sure it's gonna continue higher. If you make that assumption, I mean, if you do this kind of assumption, we will never be successful in the long term. Okay, so Okay, very well. I think that's a sensible move there to do something like that. And this market, though, keep in mind, can continue higher. So if you are happy with your gains, take all of them out. If you want to see what happens, because this market has the potential to move into 0.7430, you can wait for that. Okay. Now, when we look at the 4 hour, let's look at the 4 hour and see what this market is telling, what the 4 hour time frame is telling us. The 4 hour time frame, of course, is confirming what we saw, what we see also on the daily, and this market is moving in extensions. There was participation at this level, a level that we could anticipate before the fact. By following the rules of the FibStalker methods, I'm showing it after the fact here, but I could easily have traced this before the fact. Your 7170 in a way comes probably as a breakout of one of these levels, but comes when the market is already in a move. So these are the kind of level you want to trade, or the 50% level that we saw before. See, let me talk a little bit about that. And sorry, it's not to pick on you. I mean, I just use this example to show some of the difference between entering in a counter trend and entering in a breakout. Okay, and again, I'm not picking on you. I rarely enter on breakouts, because entering on breakouts in the middle of the move, it's very, very risky. And if you do that consistently, more power to you. I always say that. I mean, I'm not necessarily saying it's something wrong. If that's your style and works for you, it's okay. It doesn't work for me, because I want to buy. I want to get involved at this larger level when there is participation from the larger time frames. Okay. Now, I'm not always capable of getting involved at these levels, but it's not impossible, and very often we do that. So your entry here, it's clearly a breakout entry, and again, I'm not saying this to pick on you, but to me, those kind of entries have a higher risk. That said, the market has rewarded you here. The market, after your entry, moved and confirmed an extended move, came back very little. Some people will think it came back to 23.6%. Can you see how totally unuseful levels for me? I'd never use those levels, because we don't need to use those levels. We need to model the market for the way it is moving. We don't have to use mindlessly the Fibonacci levels. Okay, that's very, very important. Okay, so this is very interesting here. You are into a good trade, as you can see. The reason why the market is hovering around that level, because that second target, there is a little bit of profit taking. So this market can actually come a little bit here down on the 4 hours. So don't get scared if that happens. You need to know how the market moves. And the best way to do that is to join my my coaching program. I have a special session in May, so by no means, especially if you have gains, invest those gains in the right way. So 0.7270 here, if you see this market coming into this level and then bouncing, don't get worried. Okay, you have to start worrying if it gets below 0.7264. Right, so you can keep this trade, and congrats. It's a good trade. I mean, again, I would never have taken this trade, but the market has rewarded you. All right, but the market is not always that good. So that was good. Any other markets you want me to review? We spent good 15 minutes on that. And I suppose it was good to talk about it, also in light of the non-farm and all the other news that are coming on. Euro dollar then. You're very welcome, sorry. So euro dollar, let's review first the daily here, and on the daily now we know that the bulls on the daily are not in control. I mean, you could have imagined that, but until we get a confirmation, can you see how it is 109.60 has traded? That's the level of my charts, at least. We're going to see this chart change. I don't know if dramatically, but they may change sensibly. I don't know, because I'm using TradeStation, and as you know, as I mentioned yesterday as well, I wanted to repeat that. TradeStation is exiting the Forex business, in case you don't know it. And actually, it's basically passing all their Forex clients to Oanda. Oanda is a market maker. It's not a so-called STP, straight through processing. Oanda is a market maker, which means that whenever you buy or sell Forex, you are indeed buying from Oanda and selling back to Oanda. So Oanda will manage a risk by taking the other side of the trade. That doesn't mean that is something necessarily bad, but it's basically you're not seeing the real Forex market. You're seeing the market created by Oanda, and that's it. It's just the way it works. So from Sunday, we're going to see, we will start seeing Oanda data feed. So possibly there won't be big differences, but I will keep studying my data feed, the new data feed, to see whether I should stay with TradeStation or I'm analyzing other options as well. Okay. So that's just for you to know. My method is not going to change. The way I look at the market is not going to change. I just need to make sure that I have a reliable data feed that I can take my decision on. All right, so the longs here I have busted. They're gone. And you will remember that I mentioned on the 4-hour a specific level. Look at what happened here where the market has stopped. It has stopped at that next extension short, and actually this could be an opportunity here at the open. So something that you have and want to keep in mind. Okay. We have also the euro Canadian dollar in a continuation here. There are two potential opportunities. If I had to choose between the US dollar Canadian and euro dollars, at the moment I would actually this market is moving very, very quickly here. So the euro, so this is something to keep in mind. This could be an opportunity here. The euro dollar, and this would be 145.84 with a stop above highs 146, so it's going to be 14 pips. If we break that level plus spread, so keep that in mind as well. Okay, and the euro, so again 45, 84 and 46 here. So it's 14 plus 2. Just to keep that in mind. Euro dollar, we are also seeing a move there, and we are not seeing really a move. We are seeing a level being tested. Okay, a short level here being tested. And if you see how this market has been behaving here, so far has not had didn't have the capacity, the ability to break above that level. Whether this is going to happen or not, we don't know. And we will see here there could be an opportunity here. And if you want to have more confirmation, you can always wait for a 30-minute breakout. So US dollar Canadian dollar, it's breaking, has broken already here very, very quickly. And has confirmed the trade here very quickly. So that's something that you want to keep a note on. The stop, of course, is above these levels here, and this is a market that could continue sliding lower. So that's an opportunity for this open here. Okay, for those of you who believe that the opportunity comes at 7, the opportunity do not come at 7 in a 7 EST. They come at 8 or after 8 EST very, very often. Of course, sometimes we see the market moving before, but that's where the opportunity is. Okay, and the euro is pushing a little bit higher. Let's put this in context. Remember that the euro is testing this 108.74. You always have to keep things in context. And this dollar Canadian dollar now it's pushing lower, and so when we look at this opportunity, the entry was 34.20 here, okay, with a stop above ice. So 34 and 34.20. So talking about 16 pips of risk. And the euro, sorry, before I had the euro Canadian on, I didn't have the US dollar Canadian on, and this has confirmed as well. So let's quickly review the euro Canadian. The euro Canadian has been very, very very aggressive here. So this could also be an opportunity here for a trade. So keep that in mind. Okay. And so if we look at this market just triggered with a stop above I and could continue higher. Stop loss. And as you can see, we have to be on top of these markets when this opportunity come to play. Okay, so keep these opportunities in mind. This market could keep sliding lower for the US dollar Canadian dollar, and there is a reason for that, because this market has actually, if we look at the daily in this market is actually, it has, sorry, the US dollar Canadian dollar, which is this one. This market has, targets or level of support now down at 120, 122. And it's moving very, very aggressively here. So as I mentioned also yesterday, this the European and US session, as well as the Tokyo session, can be very good opportunity to enter these sliding markets. Okay, and I have a specific setup to do just that, and that's the reason why you see also these blue bars here. Okay, this market is piercing that level and continuing lower. The euro Canadian as also triggered, is coming back a little bit here, so it could offer another opportunity for an entry, but don't. This market is very, very aggressively pushing lower, so don't count too much into a retest of that 145.90, which would be a gift from the market. The market is not it's not very generous these days, and and all these pairs are moving very, very quickly in a rush on the downside. Okay, so the euro dollar here has retested those highs, and as you can see, is getting a little bit of participation on the downside. And let's this market has been moving laterally, so has not given really structure in this market. So it's not easy to identify an entry level. But I would use 108.66 with a stop above recent highs here. And mind though that this market could also continue higher or retest these levels and then continue laterally. So it's not showing a lot of structure that helps us at this very moment. All right. So be very careful on it. We have Jack, so under-regulated broker. What are you using to compare data feeds? Well, I'm using multi-charts to compare different data feeds. These days, I've tried eSignal. Now I'm trying IQ feeds, and I will continue trying and identifying. Try to identify. I will not comment on the quality of this data. It's not always up to the standards I would like to see, in the next 2 to 3 weeks, I will need to have a solid, robust solution. If I have to change into multi-charts or any other charting platform that gives me solid automation and a number of other things, I'll do that. What difference is there? A couple of pips. Well, I mean, if it's a confirmation level, see if all those levels change together, then when I trace the levels, I mean, to me makes a big difference. 2 pips make a big difference. In fact, my confirmation is 1 pip, so 2 pips would make a difference. So market setting up nicely for an NFP. I'm not making any assumption of what NFP is going to bring. So so we will see whether this market is going to set up here for this to happen. This consolidation that we are seeing here, which has the shape of a base. This is a base consolidation. For this to happen, has to be a reversal formation here, which so far the market is not confirming. Okay, so we can wait a little bit on that. And we see here US dollar Canadian dollar as continued lower, doesn't seem to give give an opportunity there. And all this market keeps sliding, and the Tokyo Open as well as the European Open and the US Open keep being very good. So euro dollar piercing higher here, and that would also suggest that the US dollar Japanese yen, it's actually hedging lower. It did today, but still in an up move and still respecting that participation that we saw yesterday from these levels. So it didn't get into that first target. It still has to complete that move. It's not completed that move yet. So, but you are trading such long time frames. A few pips can mean that much. I'm not trading long time frames, Jax. I'm trading daily and 4 hours, and I'm timing on 30 minutes and 1 minute. I time on 1 minute. So it has to be very, very precise, make a big difference to me. Okay. So let's go back here. Let's see if there is any structure in this price. Not so far, although the market is edging a little bit higher. Major retracement for USD Japanese yen, Giuseppe. I hope that, George. I really hope that 116.30 and So let me take some notes here. Use dollar and also use the Canadian dollar. So 116.30 and 118.40 would be big gifts. Not impossible considering market structure, and maybe that move yesterday with the three Japanese banks coming out and declaring that the bear market for US dollar Japanese yen is finished will help the sentiment for that. Will help short term this market. And in the years I've always I became very suspicious about these things, because market manipulation is a fact that it happens all the time. We have to be honest, and some of these things may be used even temporarily to push market into next shorts level. So be very careful. But see, we will have the proof. We'll have the proof very soon. If the market can get into 116.30 or 118.40, we will see which kind of reaction we will have there. See, those levels will offer a risk-free trade anyway. So we don't even have to, risk money to go and see what the market is gonna give us. It is very interesting, George, and it happens all the time. It happens all the time in the stock market and in all other markets. I'm not saying that the banks are lying or are putting out information which is not true. That information that could be very true. The point is, even if it's true, can three banks sustain the US dollar Japanese yen, which has been used in the carry trade for some time? Now, the only thing I see that could go in that direction, if we look at what has been happening lately to the stock market might be, and my proxy here is always the SP 500. This market may be in the next bull market. This market is going to 2003. Make no mistake about it. Okay, and trading in extension on both the 4 hours and the daily time frame, no doubt about the fact that even tomorrow or on Friday we could be at that level. The point is, triple tops are very rare events, and I don't think that this market is going to come here and then reverse again. Well, if it happens, we are going to trade that short, but this market might well continue into 2200 now and even 2400, and that's an opinion. It's not a fact, but if we go back on the weekly time frame, we can see that setup. I could safely say that there are weekly participants in this market that are still supporting the stock market for higher prices, and I can boldly say that and show that. I've been following this market forever. I've been giving these levels I've given the October level 2014 here in advance. I've given the 2015 level in advance, and this level is still held here. It's holding here. See, if the algos or the professionals were interested in declaring the bear here, they would have how little. Look how little they would have. We know very well that there is activity that is made on the market, which is even legal, because the activity of the president's commission on financial markets is to, of course, sustain the market or make sure that the market are orderly, and that's completely legal. It's made and it's done in a number of ways. Okay, but look at this. That's the proof. Proof is in price. Look at this participation that we had here. And if you go back, there was a level 1833 here in the past. This is a continuous contract, so the level are skewed. The level of today were not the level of that you saw before, because this is a continuous contract. But the The actual price was different, but the level was the same. So how little would have been was the requirement here to just push this price below that level, and that makes a big difference. But if this scenario happens in stocks, the JPY might retrace back, and in fact, that's what I'm telling you. The only hint that the market is going to give us. That's a very good point, George, and that's what I was saying. The only hint is the SP 500. Okay, so if the SP 500 is going for new highs, it means that the carry trade is still on, and this Japanese yen is going to continue higher. However, the weeklies, while the weeklies are supporting the SP 500 higher, the weeklies didn't do the same for the Japanese yen. And I follow my models very, very strictly, George. I couldn't care less. Sorry for this, but for this expression, which is not really elegant. So I do not really. It's not very important to me what people say and what banks say, because if we have a method that actually requires the input from news and banks and what thousands of other traders are saying, we will always be victim of discretionary thinking and discretionary action. So I have enough opportunities. I mean, these markets are giving us, Forex is giving us enough opportunities to have the privilege of saying, do you know what? If the shorts in US or Japanese yen does not work, it doesn't change my life. Okay, so that's where I'm coming from. But for me, the value of following always, no, I don't know. I don't change my level. So what I was saying is that for me, the value of following a strict analysis, it's more than the loss of one opportunity. I do not change my levels at the beginning of the week. I trace my levels always the same way. If price changes, I change the level according to the rules. But always tracing the levels as you see me tracing them. So the highs and lows that the market prints are what is important. I don't have opinion on that. Okay, so that's a very good discussion indeed. The SP 500 could be the only reason why we potentially this is still potential. And look also at the difference on how the if we put the US dollar, Japanese yen close to the if we put it close to the SP 500, you'll see that the SP 500 has actually moved a lot. And look at the US dollar Japanese yen has basically moved laterally. While the SP 500 was starting the rally here, basically if we go there, February the 11th, if we go to February the 11th in this market, basically that's where the rally has started, right? That's when people in the know, algorithms professional, the Fed, you name it, they have decided to sustain this market. It was February the 11th, and February the 11th, this market started moving laterally. So there could also be a case. I agree with FX Ambassador who's saying Fibonacci responds to price, not time. Indeed, I do not understand the application of Fibonacci to time, because it's like saying tomorrow this is going to happen, or in 1 month this is going to happen, which is a big assumption on price. On price behavior and development. So very, very well said, FX Ambassador. Again, FX Ambassador is saying Fibonacci respond to price, not time. Very well said. So, but here we had the US Japanese yen moving laterally, basically, and the SP 500 moving higher, and it's going to continue moving higher, which means that when this market will eventually correct and this is moving in extension. So you might do a correction like the ones that we saw back in October 2015 and in October at the beginning of at the end of 2014 as well, which means that this market goes higher like this in a very extended way, and then bam, in few days comes back to an next extension, and then it continues higher. The problem is that it's very easy to identify this level in advance that the market has to test. It's very difficult to identify when that move is going to start. Okay, so for now, this market is moving higher, and we will enjoy this market moving higher. All right. Very good. I mean, it was a very good discussion, actually, and thanks, FX Ambassador, for timely sharing that view there. Okay, so we also, what we did, we also compared the US dollar Japanese yen and the SP 500. Okay, all right, so it's 8:40. So what I'm going to do, so if I set Fib to yearly high to low, it would be the same if I set it to monthly or weekly or day high to low. No, Jax, there are rules to do that. Hi, Pankai. There are rules to do that, Jax. You don't do that randomly. Okay, and those are rules that I share in my coaching program if you are interested. Okay, so it's 8:40. So what I'll do now, I will start a recap of our session right now. So what we did, I was asked to review the Australian dollar, the Australian dollar US dollar, which has been moving higher, thanks also to the news, the good news on the GDP. GDP yesterday, and this market has traded 71.14, which has target around previous highs. That's a good exit level. On the 4 hours, we saw that this market is being pushed higher in extensions, so could potentially move higher. On the daily, the second target is 0.7434. I would suggest taking some partial profits when it gets to previous highs. Euro dollar has pierced our participation long, and so to me, there's no interest from dailies to pull this price higher, and this market is trading, and we can have a quick look at it. As you can see, it is trading shorts. It could be an opportunity for a short below 108.66 with a stop above 108.73, which is not too bad, because if you look at that, we are talking about just 7 pips plus spread, of course. Okay, so get ready maybe to trade an opportunity there. So talking about around 9 pips of risk, with a stop above highs, and that could be an opportunity there. Then we actually talked about, we touched very quickly on the US dollar Canadian dollar. There was an opportunity there again. We saw that market sliding, and this market is now still sliding. If we look at the 1 minute here, there was the opportunity here, this blue bar, which is what I call the the Tokyo Open. In reality, the Tokyo Opens before, but that's when the opportunity present. Okay, and then we talk about US dollar Japanese yen. That market is, and here the trigger for the euro dollar, if you are interested, and the market, that market actually, and I'm talking about US dollar Japanese yen now, is actually sorry, what I was saying is it's actually showing, of course, is actually showing a move lower. Sorry, a move higher, of course, and we are still looking at 116.30 and 118.40 as potential resistance. That would be great gifts for us. Sorry, just to complete on the euro dollar is trading an extension short on the daily, and as a result, the US dollar Japanese yen should continue to move higher. We had some news from banks yesterday. They mentioned that the move on the move lower could be ended, and of course, I'm not going to fall in the trap there. The move we're talking about, the move in the US dollar Japanese yen could be ended. I don't. I would not. I would be careful with this kind of statements, and actually, the only hint that these markets are offering, with a potential reversal of the US dollar Japanese yen, is what the SP 500 is showing here. Okay, and the SP 500 has been moving higher since February the 11th. All right, so if you keep joining me in this room tomorrow at 8 p.m. and from next week at 7 p.m. from Sunday, March the 6th, it's going to be from 7 p.m. We will keep analyzing this market, and we will be on top of these markets. Just to answer the last question from Jax saying, so Fibonacci does change with time. So there are two statements to do there. Fibonacci is not capable, in my humble opinion, to project time, but Fibonacci level changes all the time on all the time frames, and that's if you use them to model algorithms, which is what I do. Okay. So the reason why sometimes those levels, horizontal levels like this one, do not hold is because those are not the real level where interest from professionals and algorithms in modern markets is. And mind that in modern markets, 80% of participation comes from algorithms. All right. So this is it for today. Thanks a lot for joining in. Thank you very much, Pedro, BW, Gary, Dion, Roland, Label Lopez, Richard, Adinda, Horace, Mauricio, Lee, Sinatra, Mervin, Desi, Jason, Joe, Gary, Peter, Pantelis, and Jax. Hello, Scott, and you're very welcome. And if I miss someone, mind that you are not in the list, so I have no ways to identify you. So thanks a lot for coming in. There is also FX Ambassador, of course, which is not showing on the list. Maybe I should just refresh. But I'll see you tomorrow, and happy trading and safe trading. Have a good night, day, afternoon, and I'm going to see you tomorrow. Thank you very much. And by the way, if you are interested, again, I'm going to leave the slide on here. If you what is that? I have so much stuff here. And if you're interested, remember that in May, I'm going to have a special session of my coaching program, which is now at its fourth edition. It's a proven program, and it's not a course, so it's not that when it ends you go by yourself. I'll keep helping you realizing the objective of the program. Okay, thank you very much for joining in, and one of the reasons that I want people to participate in the coaching program is that I am creating community of traders who are interested in the FibStalker methods, and for those traders, I'm going to open up additional resources, and we're going to create a very good and active, as it is growing now, community of people who share the same interests and the same methods. All right, so thank you very much, and have a great one. Bye-bye now.